Hello and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed by a technical expert. But before bringing our guests on board, let's see what the global handover looks like. European markets closed lower yesterday with global growth concerns dominating the sentiment and investors looking ahead to US inflation data today. All key indices in the Eurozone ended in the red with Stoxx 600 dropping over 0.5%. Wall Street ended Wednesday's trading session lower with the Dow Jones shutting 28 points lower, the S&P 500 down 11 points and the Nasdaq closing 9 points lower. Shares in the Asia Pacific were mostly lower this morning as investors await inflation data from the US due later stateside. SGX Nifty was down more than 2%. Back home, Wipro, HCL Technologies, Adani Wilmar and Suven Life Sciences would be in the limelight. We also discuss OMCs later on in the show. All right, let's get going and discuss some stocks that are likely to be in the spotlight today with Ajit Mishra of Religare Broking. Morning, Ajit, and thanks for joining in. Before we bring out the stocks in focus, want to understand what the trade setup is pointing towards as far as today's session is concerned. It's also the weekly expiry. So tell us what could be in store.
Good morning, Karunya. So, Karunya, broadly, if you see the picture that we are still in a range in a broader, pattern, but now we are also feeling the heat, especially with the US market, inching lower and making newer lows with every passing day. The silver lining is that the banking index is holding strong. So we have kind of like a, diverge move that we are seeing within the index, plus the earnings season have also kickstarted. So we are seeing, erratic swing on the stock specific front as well. With the IT majors specifically. So I feel that, the bias would remain sideways with slightly on the negative bias until we reclaim 17,400 mark decisively in the index. But at the same time, stock specific, sector specific, we are still getting opportunity as we were saying that banking holds the key, to sustain or to cap the damage. We feel that banking should be in the focus when it comes to stock specific ideas also. And index specific also, I feel that it's prudent to stick with the banking index instead of looking for trades in the Nifty.
Okay, all right. Makes sense. Let's talk about some stocks that could be in the limelight as well. And I want to specifically first flag off HCL Technologies and Wipro. Both companies delivered numbers post-market hours yesterday. And on our live comments, we're getting a lot of questions for TCS as well. So if you could talk to us about all three of these earnings candidates. Of course, TCS, we saw what happened after the numbers came by. But if we look at the chart pattern now, what are the three indicating? How do they stack up against one another?
So it's interesting, Karunya, because if you talk about the Nasdaq composite, though the index have also witnessed selling pressure in line with the other major indices in the US. But here earlier we were falling almost to the T, the IT stocks, especially the IT majors. But now we are seeing that they are restricting the lows which we made in the month of June, July. So that is something which is giving a respite or kind of a support to the participants, which are those who are holding the IT majors. But I still don't see any major buying interest. So it's a kind of a phase wherein markets in the wait and watch mode, especially for the IT major. And if you look at all three, in fact all four big names, Infosys, TCS, Wipro, HCL Tech, they're kind of forming a similar kind of a pattern wherein they are just trying to defend the previous swing low. So as of now, there's no clear indication, especially from the IT majors, on the next probable positional trend. But yes, we have some of these mid-cap IT names, stocks like Persistent, stock like Mindtree, wherein we are seeing strong buying interest, or you can say that they not only upheld the major averages, but also now we are seeing that they are witnessing buying interest. So one needs to be selective in this space, and I feel that if you are a short-term trader, then the preference should be given to the mid-cap IT names.
Okay, all right. So mid-cap IT clearly looking more attractive then. Moving on to Adani Wilmar, they've given out their Q2 business update. They're expecting Q2 revenue to grow in low single digits on a year-on-year basis. However, if we look at the first half projections, first half of FY23, revenue and volumes both they're expecting in low double digit. Talk to us about Adani Wilmar. In fact, this is one stock we get a lot of queries and questions for as well. How are the technicals placed and which way do you think it's headed?
Karuna, in fact, the entire FMCG basket, if you see, are witnessing profit taking. So even the top names like HUL, Colgate, Dabur, we all seeing profit taking or a bit of consolidation at the present level. And we are seeing a similar kind of a trend in Adani Wilmar also. But yes, the stock, usually witness a lot of buying interest on every up move. So we recently had an uptick. So I guess the people are trapped in those, up move because, anticipation was that it might retest the record highs again. But that's not the case right now. And I feel that if you are a trader, then you should maintain a stop at 680. Below that, this may again, witness further selling pressure and level close to around 650, 645 could be the next area. So 680 should be a stop. And in case of rebound, 735, 740 is going to be the immediate resistance. So around that area also, you should try and, look to reduce your position in case if you're holding longs.
Okay, all right. The final name I want to flag off to our viewers is Suven Life Sciences. They've got a board approval to raise 400 crores via rights issue. They'll be, raising almost 400 crores actually, by issuing about 7.3 crore shares, and that's what they've got the approval for as of now. Suven Life Sciences, how is it poised? And of course, yesterday it was slightly sluggish. In fact, last 1 month it has, it has seen a bit of a sluggish move. Largely, whatever action happened on the downside. What lies ahead, according to you?
So you rightly mentioned that we are not seeing any action in the stock. Of late, we had a couple of days wherein the stock moved up very sharply from roughly around 70 to 85, but the entire move has fizzled out again. And again, we are retesting the major support area close to around 68, 70 zone. So I feel that in case if it witnesses any uptick again towards the level of around 80, 85, and if somebody already have a long position, they should try and look for an exit because it's the overall trend is still negative and we are not seeing any decisive move and it lacks volumes also.
Okay. Ajit, request you to stay on with us. I want to touch base with my colleague Nitin Sharma from Money Control Pro, who tracks the oil and gas space closely, to talk about what's happening in the sector and what should one do if they are invested or plan to invest in this space. Nitin, morning and thanks for joining in. A lot of these OMCs, we saw them react quite positively, IOCL, HPCL, BPCL, on back of reports that the government is looking to infuse about 22,000 crore rupees to cover for the losses that these companies have incurred on retailing of petrol and diesel. But overall, how is the sector looking? Because OMCs clearly have been an avoid for the street for quite some time.
Good morning, Karunya. Oil market is in very interesting territory. So you rightly said that OMCs have seen some actions, but broadly investors remain kind of a handoff situation. Now, to dig a bit deeper on it is that the overall oil market appears to be in a very thin surplus stage. And when you account in the upcoming price cap sanctions on Russian oil, so then it appears by the year end, the calendar year end, market is likely to be in deficit. Now, when we spoke last time in the first week of September, I was of the view that below $90 per barrel oil is not sustainable and minimum it has to range between 90 to 95. Now, those driving factors have not changed since then. In fact, they have gotten worse. OPEC is following their own policy. Europe's situation is contingent on how the cold winter is. And we are also seeing the cracks appearing. For example, you have seen how long petrol pump queues are there in France and they are being rationing it. So all in all, it's affecting the Indian oil and gas sector as well. So just to touch upon it, so the top three OMCs, HPCL, IOCL and BPCL, if you compare on last year June quarter, to this year's June quarter, their borrowings have increased by 32%. Primary reason has been that there has been a freeze on the retail prices, and at the same time, the refining margins are very low. While in the fourth quarter, refining margins improved a lot with a record, but at the same time, it kind of tapered down from there, and 2Q is somewhere into single digit, the refining margins. That is one problem. So what happens is that at $90 plus, there is a 5 to 7 rupee kind of a shortfall for an on the retail prices. So they're incurring 5 to 7 rupees loss on every liter that they sell through the outlets. And this situation get worse because previously, as we have seen from between March to May, they have been exporting the diesel as well as the ATFs to overseas market. But government came up with a windfall tax, and then they took away the incentive to make any money out of there. So that is a very tight situation. Now, what happened with the 22,000 crore payment by the government? This covers, it does not cover overall under recoveries in the LPG segment. Our understanding is that LPG segment at the current price of 1,050 is barely making the cost meet for these firms. So under recoveries, some payment towards under recovery is good, but still not does not pay them 100%. The bigger problem is that Street was expecting that government is going to provide some sort of payment with regards to under recoveries in the auto fuels, that is your petrol and diesel. But that has clearly not happened, because that is the chunk of the business for these OMCs companies, and there is no clarity so far that if it happens, and if it happens, when it will happen.
Okay, all right. But overall, how is the OPEC plus supply and demand situation, the impact of Russia-Ukraine conflict, which again has gotten escalated? Because if we look at impact on India in terms of demand, supply, pricing, where are we placed?
So, interestingly, what has happened is that OPEC announced earlier this month that they're going to cut the supply by 2 million barrels. Net, the impact is closer to 1 million barrels, bulk of it coming from Saudi Arabia, UAE, and Kuwait's quota. The bigger problem is that there are multi-factors that are going to drive. So, China has seen a tepid consumption of oil and oil products because of their lockdowns. But the situation seems to be improving. That is one. Secondly, the US strategic reserve is a 40-year record low. So at some point, they need to refill it. Thirdly, as the winter gets denser going ahead, sometime in December, European gas storages are expected to kind of deplete. And at that point, the switching should happen towards diesel. And that's why we are seeing that diesel demand is still robust in the European markets. All of these are a good driving factor for oil. And that's where we believe that it will not go, the Brent crude will not go beyond below 90, and good chances it to touch $100 per barrel in the near term. Now, what it means for Indian market is that at around $90 per barrel, India's monthly outgo or the payment for oil is around 1,05,000 crore per month. Now, any further surge in the oil prices would mean that outflow gets much bigger, and it's a challenge for the exchequer. Secondly, for the OMCs, the situation will get dire. So our understanding is that given the overall situation, the inventory revision that might they're expected to come, they are expected to report losses in 2Q, and these losses will get much larger in the third quarter.
Okay. So net, what is the bottom line? From an investment standpoint, like you said, there could be more pain for these OMCs. So should one stay away, or should one maybe consider buying it in a staggered way in the next few quarters? And which stocks,
Right.
if any, if you like?
Sure. So within the OMCs, year to date, there has been a good 20 to 25% correction. But when you look at since June, the correction has been very small. So we expect that there might be further correction. And once that happens, they can be good territory to buy with a short-term view. That is with the OMCs, top three OMCs, the HPCL, IOCL, and BPCL. With regards to upstream companies, India is the only major market where oil upstream companies did not give any decent returns. So we don't see it changing anytime soon. Whatever better realization that might come are likely to be taxed away in the form of windfall taxes. So we don't see much opportunity to upstream company as well.
Okay. All right. Thanks, Nitin, for joining in and sharing with us your view on the oil and gas space and OMC specifically as well.
Thank you.
All right, back to technicals once again. Ajit is standing by, so let's bounce off some of our viewer questions to him. Ajit, the first question I want to pick out is from Sudha. She wants your view on NTPC. How's NTPC looking? Because, again, last 2-3 weeks, the stock has been rather range bound, plus minus 5 rupees. Talk to us about the way forward.
So Karanya, the stock, retested the record highs, almost after 12 years, because in 2008, we tested this level of around 176 and we retested the same, off late. So it's obvious that we are going to see some consolidation, but the best part is that we are still not seeing any selling pressure coming in. So both Coal India and NTPC, after a prolonged period of underperformance, we are seeing sustained buying. That is something which is credible. And from the very short-term perspective, also, I feel that 155, 156 is the area basically where we have multiple supports. So in case if it's a trading position, Subhashji, you can continue to hold with 155 as a stop loss and close to around 175, 180. That should be an immediate target.
Okay. The next question is coming in from Jerry Sanchez, and he wants your view on ICICI Bank. Now, this one, at sub 900 levels, does it look attractive for those who missed out on the rally on the stock price, or do you think one should wait for it to retreat slightly further more to sort of enter into it?
Yeah, so in case if the view is very short term, you should wait because we are seeing a bit of consolidation. But the important aspect is that SBI and ICICI, these are the two banking names which made a new record high in the recent rally. So that is something that clearly shows the kind of outperformance that we are seeing in these two banking majors. So that should remain on your radar. Is just that from a short term to medium term perspective, in case if you want to accumulate, then you can buy even at the current levels and add more around 840, 830 zone. And positionally, we are eyeing 1000 plus zone. Okay.
Moving on to the next query from Siddharth. He wants your view on Mazagon Dock Shipbuilders. Yesterday, of course, it saw a solid 6.5-7% uptick. Talk to us about the way ahead.
So, Karanya, for this particular stock, and in fact, some of the names, from the PSU basket, which have done exceptionally well, especially for the traders, it's very important to maintain stop losses because at times we just see the returns that the stock have, made in the recent times. But at the same time, the move is almost vertical. So, in case if you are trading all these names, which are among the top performers, irrespective of the market situation, do maintain stop losses, strict stop losses in these names. So for Mazagon Docks, 575 should be a stop, which is slightly deeper, close to around 40-45 points. But that's the area basically where we have immediate support, and upside 675, 680. That could be the area basically where it might face resistance again.
There are a lot of questions coming in on PSUs, and the next one also is from the same universe. Gopal wants your advice on Gail India. So what's the verdict there?
So Gail is not witnessing any move whatsoever because the stock has been struggling below the long-term averages. At the same time, if you see on the longer-term time frame, the levels close to around 80-85 is the area basically where we have multiple supports. So it's a kind of like stuck in a range 85 to 95. So for time being, Gopal, you should avoid any fresh position. And in case if you have existing position, it's prudent to exit and wait for a breakout above 95 to re-enter.
Okay. What about Bajaj Auto? Surya is sending us a comment and he wants your view on Bajaj Auto. Again, yesterday, good uptick, but overall, from a near to medium term, how is the chart looking? What's it pointing to?
So within the two-wheeler space, I feel that TVS is the strongest name, but Bajaj Auto is also have done well. But now we are seeing again, pressure, or you can see the profit taking in the auto basket, and Bajaj Auto has also retraced from the recent highs. For any fresh up move, it should reclaim 3750, 3780 zone decisively. Then only we're going to see any sustained uptick. Otherwise, this stock is going to remain range bound with 3450 to 3480 as a lower band. So as of now, it's an avoid, but for the existing position, 3480 should be the stop, and any rebound towards 3750, you should try and exit.
Okay. I want to also flag off Allcargo. Seen a good 100 rupees upside last 1.5 months, and we have a question coming in from Trilok. What is the view here for Allcargo?
So Allcargo definitely should maintain long Trilok, because almost a year-long consolidation breakout that we have seen in the stock with very strong volume. Is just that the markets are slightly wobbly and we are seeing a bit of a pause, but we are not seeing any selling pressure. The volume have dried down completely, so that indicates that this momentum is not going to fizzle out anytime soon. So 370, which is slightly deeper stop losses, but the stock is something, it's a high beta stock, so you should maintain that level as a stop loss. And upside, the stock has the potential to test 480 to 520 levels in next 3 to 6 months.
Okay. Next query, this is from Raja. He wants your view on Zomato. Now, 60 rupees, early 60s is something that has become the new norm for Zomato. It's been trading in that territory for quite some time. What is your understanding of the chart here?
So, Karunya, yes, we have seen a short-term trend reversal in the stock, a couple of days ago. But now, from the last couple of trading sessions, we are again seeing the profit taking resuming. So, it's a very critical area. So, I feel that as a trader, your stop should be at 61. In case if it fails to hold this level, then this move or the reversal would negate, and we are going to see the stock again drifting lower towards 55, 54 levels. So, 61 should be your stop, and upside. In case if you can spend a couple of weeks in the stocks, so then 74, 75 could be the target area.
Okay. Very quickly, last stock I want to address. This is Tata Motors, and Vipul wants your view. He has been holding it from 425 rupees levels, and the stock is now sub 400 rupees. So what would you advise here? Average out or stay put?
See, it's an underperforming stock within the auto basket. So if the view is short term, I would recommend to exit on any technical rebound, because we have the support around 388, 390 zone. So with that as a stop loss close to around 405, 410, people you should try and exit.
Okay. And Ajit, how about your own preferred picks in the market right now? Which stocks are you eyeing?
Right. So Karunya, in a market like this, one should maintain long and short approach. So from the long side, Federal Bank is among the top performing name within the banking basket and looks strong enough to maintain this prevailing momentum. And we are eyeing 132 in the near future with 119 as a stop loss. One can go long. And the life insurance basket, largely we are seeing profit taking across the board. So HDFC Life, we have seen a fresh shorting pivot formation. And with a stop of around 540, one can go short even at the current level with 500 as a target.
Okay, thank you so much, Ajit, once again for joining in and for sharing your picks, your views and your assessment of the market technicals. With that, we're going to wrap it up right here on the show. But before that, here's a quick programming reminder. It's going to be Infosys numbers today in the limelight. From 4 o'clock onwards, we start detailed coverage. We'll start with the press conference and then a detailed analysis of the performance for the quarter gone by and the big highlights of the management commentary. So don't forget to tune in at 4 p.m. today. All right, on that note, it's a wrap from us on Morning Trade. Thank you so much for tuning in.